Hello.
How's it going?
Good. How you doing? Well, who's this? Where are you calling from?
I'm doing well. It's Mike in Orange County.
Mike in Orange County. What's on your mind?
I used to work at a regional bank many moons ago. And Silicon Valley Bank particularly is sort of an incestuous sort of relationship with its depositors, in that the venture capital firms that held capital through their many ventures at the bank also in many cases were the shareholders of the bank,
right,
and had positions at the bank. And so that was sort of why they had so much capital, not in sort of like, overnight treasuries, which is what you should do if you're managing that much capital. And instead they had it basically just in a checking account.
What's an overnight treasury?
So essentially most large institutions can sort of make relationships with the bank themselves to basically buy treasuries after hours and hold those overnight. So it's usually a 0-day treasury. So it's just a treasury that will expire the next day. And so it's already to par essentially. Essentially, what happened in their portfolio is they bought long duration, interest rates went up, then they had to mark the market once people were running on the bank, right? And the way the banks function now, many of these are not dissimilar from what you saw at Enron. Like most of our corporations now operate on a mark-to-market basis. Almost no one is doing GAAP accounting anymore. So when rates move, they have a significant deterioration in their balance sheet, particularly because none of them hedged, because none of them thought there would ever be a rate hike.
Well, will you explain that to me? How do you think there's never going to be a rate hike? Is everybody there like 22?
They are asleep at the fucking, yes. I mean, probably, yeah. I mean, I work in the banking sector. I'm nearly 40. I'm pretty young. But a lot of these folks at Silicon Valley Bank, probably younger than me. I mean, they're probably a decade younger than me. And a lot of them sort of had this thesis that ultimately the Fed, it just has to keep rates low forever due to what they consider the deficit, the federal deficit and things like this. Joke's on them. I think the Fed's just going to continue to raise. The Fed is actually sort of conducting war both against its own labor force in the United States and other central global banks, mainly China. Japan is going to be a victim, and so will Europe, because all of the banks are in a similar situation. Most countries in the world have run enormous deficits. Now, I know you never care about deficits, and a lot of people don't, and that's true if you're the United States, because you have the position of the military force. You are the imperial power. You are the empire. That's the fact. So when we raise rates, it fucks everyone else. And so this is a monetary war against every other country in the global south that has debt denominated in US dollars, and they're getting absolutely wrecked. And so that earlier caller who said this won't be like 2008, or this will be like 2008, and you're like, it won't. You're absolutely correct. It won't. Something's going to break overseas. It may be a Credit Suisse. Not saying anything, not investment advice. Don't get me in trouble. But another bank overseas will break, and you'll start to see things unwind. And if you're exposed to China, I would be worried, because I do think a ban on U.S. investment in China is just sort of not investment advice, just saying, because Tesla and many others that you guys consistently talk about the CEOs and their personalities and how awful of individuals they are, have a lot of risk tied up in China.
Right. And to be clear, the reason why China would do this is because as our interest rates go up, their debts become more expensive. Is that it, essentially?
Correct. Correct, yes.
And
they have a lot of dollar-denominated debt. All the conservatives always talk about how much China owns our debt and yada, yada, yada. That's not true. I mean, they do own some.
They own about 10%.
We own a lot of it.
They own 10% of our debt. I haven't looked at it recently, but it's 10%. Like 50 to 60% of the debt owed to the United States is us.
It's us, yes.
We've borrowed it from Social Security, which is incidentally why they want to cut Social Security.
Yeah, exactly. Because if they raise the cap, then they'll show that the money's always been there.
Yep.
They ultimately just never want to raise taxes. That's what it is. If you raise taxes, you fix all of these problems.
Yes.
You really do. You fix inflation because a lot of this monetary speculation that we've seen, both in regionals, but both in large banks, in venture specifically, investing in profitless companies. I mean, I'm sorry. Half of these things, we don't need these companies. We don't need them. And I'm sorry if you work at them. You'll be fine. You'll probably find another job. You're a programmer, okay? In other industries, probably. But most of these companies should never have existed. They've never made money, and they will never make money.
They're just speculative sort of apparitions in some respect.
Exactly.
Trying to get
because
bought.
Interest rates were. Yeah, exactly.
And the guys that founded it will get a huge payout. And so, like, when we had that earlier IMer call write in and say that these are job creators, it's so silly.
That's absolute bullshit.
Yeah.
Yeah. That's the biggest joke I've ever heard. What jobs? The shitty ones?
Yeah, and then they'll be gone, laid off because labor's the easiest cost to cut, and then that makes it look juicier for it to get acquired.
But just to be clear, in terms of China, I mean, China holds this. They have dollar denomination debt. In other words, they owe money in U.S. dollars. Is that it? And as
correct.
the interest rates go up, the dollars become.
They have to. More valuable.
Exactly. And the dollar becomes more expensive to them. So to pay off this debt, they've got to pay more, essentially, to get more dollars.
They have to print more Chinese yuan in order to service those dollars, basically causing their currency to go down further and also creating more demand for the dollar simultaneously.
Yep.
And that is happening everywhere in the global south. Brazil, all the BRICS countries, South Africa. I mean, no one is in a good shape in terms of central bank policy. They've all essentially run balances like this. And they're outside of maybe Russia because they knew sort of that they were basically on the outs. No one else is in a good situation. The U.S. is in the best situation only because we have jets and a Navy that's bigger than everyone else's. And we can tell them, you got to pay up.
Right.
We're going to make everyone else suffer so that we suffer less.
Right. I mean, this is the classic. This is how money was developed, right?
Yes,
Rome goes and conquers other lands, says it's too expensive for us to send, food and supplies to these people. They need to buy it locally. Well, what money will we use? We're going to require taxes from these people. They're going to pay us in our own currency so that our soldiers' currency has value to these people because we're forcing them at the tip of a spear to pay us taxes in that same currency.
Yes. Yes. It's why I'm not as bullish as everyone else on Bitcoin or gold or any of this other stuff. I think gold might work. It might go up like it's always kind of gone up a little bit. It may work in a hedge if we have a huge market downturn. But ultimately, the dollar is going to be the one that's going to win.
Yep.
And a lot more banks are going to close because a lot of banks, it's going to be mostly regional. I don't know if it'll be systemic because they are not systemic. And we're so consolidated post-2008. But a lot more regional banks are going to go. And it's just because they went way too out on the risk curve. They wanted to pad their shareholders.
All right, just to be clear, what that means on the risk curve, the amount of deposits they have relative to the amount of money they've leveraged is just out of sync. There's no capital controls.
They have no hedge. Yeah, no capital controls, no hedge risk. I mean, they could have just easily come to a market maker like a CME Group or any of those and bought risk hedge for really cheap, especially 2 years ago when rates were nothing. They could have easily gone out, but instead they wanted to probably pay themselves compensation, to pay a bigger dividend, whatever the case. I mean, and
how big a bank? How big a banks? Like, I mean, is there, in your opinion, is there like a dollar number where you get a sense of like you wouldn't be this big? Is there a zone, in other words, between in terms of like the size of the bank, where and we know at 250 you start to get you get regulated, so this problem theoretically doesn't exist, at least not in the same way. But is there a zone where like if you're a $10 billion bank, you're not going to be doing this. You're just not going to be. But is there a zone where you start to get? It's almost impossible to be that size without having done this because all your competitors are doing it.
Yeah, I mean, anyone under 500 billion is probably doing it.
Any under 500 billion to where though? To like down to the just any bank? Are all the banks
pretty
doing
much
this?
Probably all the banks in the regionals are doing it. Yeah.
Oh, okay.
To some degree. Now, some may have bought hedge. You'd have to look at all these balance sheets. I'm not going to say that. You know, I'm sure a lot of the ag banks are really well capitalized. They've been doing this for a long time, basically. Year over year. And they can't take much risk just because they can't get blown out. If they do, it's real bad. And that's why I think so many people are upset, particularly why I was so enraged, was, we saw so many ag banks post-2008 go out, and they lost money on, and you can go, hey, it's a farmer, whatever, he had $3 million. Well, he didn't really. A lot of the times, he borrowed capital in order to go purchase equipment. So he's already leveraged. He had that money in his account for some time because he was going to buy equipment, and some of them got vaporized. And so all they have is debt now. And they didn't get bailed out. They lost that money.
Right.
And so it's only because these Silicon Valley people have the connections on Twitter to pump it up. They probably made a call to the Biden administration. We know they did. Half the fucking donors are in those banks.
Yep.
Sorry.
Yep.
They are.
Yep.
Okay. And so when the Republicans are complaining that, it's because they called the Biden administration, they're probably right. They're probably right.
Right.
And this is going to have election implications. It will. It will. Because there's going to be more banks, and they won't backstop them all. I guarantee it. There will be a couple, and they'll be in the Midwest, and they might not backstop them, and people will lose, and it'll be plumbing businesses and electricians that employ tons of people.
Yep. Well, appreciate the call, man.
Yeah.
Thank you.
Thanks for having me. I know I'm not maybe the typical caller.
No, I like it.
It's important insight to have from this perspective. I mean, we're gonna.
I'm not I was a Marxist in my young days. I still am. I think we need to nationalize the railroads and the oil companies. But I'm also a math nerd, and so.
No, that's the perfect crossover.
Appreciate it.
Very
if you have
valuable.
anything else that you think that would be helpful to us, send an email at majorityreporters@gmail.com.
Okay, yeah, I'll do that.
Thanks, Mike. I appreciate it.
All right, take care.